Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news US equity markets have made a comeback from yesterday's tech rout, but it isn't a full comeback yet in the tech space. In addition, general economic sentiment is more sober about the 2025 prospects. But first, last week's US retail sales were up 4.9% from the same week a year ago. However, new orders for manufactured durable goods fell 2.2% in December from November, following a downwardly revised 2% drop in November, and far below the market expectations of a 0.6% rise. Year on year, the December month was 3.8% lower than the 2023 month, and that dragged the full year result lower. Basically, it held until December, and then there is this unexpected drop. Also at a level less than expected and less than the prior month is the January survey results from the Conference Board for Consumer Sentiment. And the regional Richmond Fed Factory survey remained soft in January, and their services sector softened too. And the Dallas Fed Services survey also moderated in January. Things are likely to get more uncertain. Brutal dawn raids are underway in the US on undocumented workers, and the White House has stopped almost all federal assistance programs. At the same time, access to the OMB website that can give details on this action has been disabled. Confusion reigns. Most at risk is funding for education, disaster aid, and housing. All up, it is a war on poor people in support of billionaires. The US Labor Board has been eviscerated. All foreign aid is halted too, as the US gifts the world to China's influence, backed up by bullying of other nations' leaders. US public policy has suddenly become an ethical wasteland. There was a slightly less well-supported US Treasury 7-year bond auction today, and that brought a median yield of 4.41%. That was less than the 4.49% yield at the equivalent event a month ago. In China, the Spring Festival migration is underway, and they expect a mammoth 9 billion trip events over the period. It'll be a test of their facial recognition tracking system, or as they say, their ticket verification system. In Malaysia, inflation seems well contained, but there is a but. Their PPI fell 0.4% year on year in November, but it rose 0.5% on the same basis for December. While both levels are low, that is a month-on-month rise of 0.8%, which is on top of a quite fast month-on-month rise in November. On a producer basis, they need to keep an eye on this momentum. In Australia, the December NAB Business Sentiment Survey remained negative, but a little less so. The same survey shows businesses think conditions are positive, and a little more so. And staying in Australia, we should probably note that the ATO, their federal tax authority, is now targeting landlords for undeclared income. They think more than $1 billion Australian is being undeclared. The New Zealand IRD is running a similar campaign. Both have new data matching capabilities. But what makes the Aussie effort interesting is that because they have a means-tested age pension program, it is a magnet for hiding income so that a claim on it qualifies. It is a vulnerability that doesn't apply in New Zealand. Aussies at risk will not only have to pay back undeclared rental income, plus interest, plus penalties, but they'll also have to pay back the super they weren't entitled to, plus interest, plus penalties. It'll be a very expensive tax dodge for them. And later today, there will be an important release in Australia on their inflation levels. They will disclose both their fourth quarter level and their monthly December level. Both are expected to ease to about a 2.5% rise from a 2.8% level in the third quarter. Some think as low as 2.2%. An undershoot will encourage the RBA to move by reducing their 4.35% cash rate target, but a hold or a rise will likely put that off the table. The RBA next reviews its policy rate on February the 18th. The US Treasury 10-year yield is now at 4.56% and up 2 basis points from this time yesterday. And the price of gold will start today at $2,757 an ounce, up $24 from yesterday. Oil prices are up 50 cents at just over $73 a barrel in the US, while the international Brent price is now at $77 a barrel. And the Kiwi dollar is now at 56.6 US cents and down 20 basis points from this time yesterday. Against the Aussie, we're up 10 basis points at 90.6 Australian cents. Against the euro, we're also up 10 basis points at 54.3 euro cents. That all means our trade-weighted index starts today at just on 67.1 and unchanged from yesterday. And the Bitcoin price starts today at $102,256 and up 2.5%, a partial bounce back from this time yesterday. Volatility of the past 24 hours has been moderate, also at 2.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.